Thursday, October 16th, market analysis, Stan Ehrlich. Well, we had a pretty good down day in the S&P and the other indexes. This happens to be the second lowest close for the last 5 days of on the average decline. We did have an ER sell signal a couple of days early. Signal didn't turn out to be exactly correct. And also a couple of days ago, that one also didn't turn out to be exactly correct, but part of what I still believe to be the beginning of a break to create the October lows. Excuse me. Which implies that we're going to go below the low on October 10th. Now, all the indexes have lows on October 10th so far. So I expect all of those to be broken, and very soon. A few days, a week. But by the end of October, I think we have a very good chance of being down to 62.35 range, give or take 5 or something. So that is going to be significantly low enough for me to like what I see, referencing historically, many of the previous October lows were blatantly obvious. Next chart. We simply have the 5-10 minute data showing you on a detailed 10-minute by 10-minute basis how this market is starting to slip. Certainly didn't look like it was about to turn around on the high day. Usually it doesn't. But all we have to do is start to drop below October 10th's low, and we've got something significantly more interesting developing on the short side. Next, we've got the spider, which did have a bearish engulfing ER sell signal on the exact top of the market so far, October 9th. Also had another whopping bearish engulfing. Oops, I'm sorry, that would be October 10th, the high day, because it had to be higher than the previous day's high to get a red bearish engulfing ER sell signal, which it did. We even have another one that didn't work a couple of days ago, but the top of the market so far is October 10th, high day, SPY, and we've marked it so far, pegged it. Now, again, second lowest close for the break. I need to see soon lows lower than October 10th, and it's across the board, all indexes, and not above yesterday's high. That would bother me a lot. Next chart, looks like we're starting to come down. And we do have a bearish engulfing on QQQ at the top of the market, also the exact high day, number 2. And I believe it's going to be the high of a big break, like I've been talking about in a general sense for all of the indexes. Today we have another bearish engulfing, but because it wasn't overbought within the allotted previous number of days, it doesn't turn red. Don't tell you all my secrets. But this is encouraging, even though it's not the second lowest close like the other symbols. Next, looks to me like it's going to break the lows of just a few days ago soon. Next, we don't have a bearish engulfing at the top of the market, but we do have it 3 times now, while it finally reached its highest high, which was again on October 10th. So I like what I see, but sorry, we didn't catch the exact high day. Next, looks like it's the rest of them about ready to hit the dust. Now, strangely, weirdly enough, totally, I've never seen this before. Because of the crash on October 10th, a little mini crash, we managed to get oversold on the YM. That put it into the most recent situation being oversold. Then all of a sudden, we had a bullish engulfing on October 14th, a couple of days ago, which means you're oversold within the allotted previous number of days, and a bullish engulfing has turned green. That is a legitimate ER buy signal that I do not trust. Everything else I see, including the YM in general, looks to me like the market's rolling over, going down. But this weird combination of events has produced a green bar that I would, if I could, and I could eliminate, but I don't do that kind of stuff. Next, YM 10-minute chart and the Russell simply got up to the top of the major resistance area that I've been talking about forever and dropped off sharply. That's the best it could do so far. I really needed to close below the low. Guess what? October 10th. All right. 10-minute chart. Doesn't look as bad as the others because they've recently made yesterday new highs. Bonds. Outside trading range, although up, really looks to me like one of my little bass-backward possible reversals. Ass backwards. Bass-backwards, sorry. Reversals because of the outside up day and it being overbought or recently overbought 1 day ago. Plus the fact that it's right around, it did make higher highs, closed right around the old highs, only not September 17th. But we really have to have more strength in order to pop this up a lot more. I'm doubting that. Let's see what happens next. This is kind of one of those things that looks bullish on the surface. Next. Notes, outside up day, same story. Strong close, yes, but not quite above previous highs in the same zone. Significant historical interest as far as topping out is concerned in this area. Next, crude, now oversold. Looking for a low soon. Expecting a rally back up to about 60. Yeah. And that could be from lower levels still. I'm not saying today's a low day. I'm just saying I wouldn't be selling short at this point. It's oversold. It could turn back up at any point, but it could drop off a chunk more first. Our oversold conditions do last sometimes 2 days. What was that? About 4 or 5, 4 days. That's a couple of days. That's a couple of days. And that's fairly short overbought. A couple of weeks, 3 days, a couple of weeks. So don't jump the gun too quick. Wait for a signal. Wait for some significant evidence is turning back up. Next, natural gas has made new lows to the move and did have an oversold condition, create an oversold condition today. And it's an outside trading range. So this could also be a bass-backwards reversal. Looks bearish on the surface. And I am basically bearish. But because of the way it acted, price action wise, I wouldn't doubt that it could pop back up again to, I don't know, 3.07. Might, about today's highs. But that's where the resistance starts. And even maybe back up to where it got to before 3.4. Doubt it. But this head and shoulder top I've been talking about forever is working great. Taking a while. 3 months and a half so far. Next, we've got new low close for heating oil. It's breaking out of a relatively flat bottom right triangle and support levels. Looking for a test now of 2.03-ish. Bearish. Next, gold won't quit. But look at the parabolic angle of this ascent. We are very high again historically, 87. You know my screaming bloody murder threshold is 90. When we get up to 90, like we did there, I scream bloody murder. The market's about to top out big time. Well, I was right for a day or half a day. So I'm going to have to do it again because I know that's the right thing to do. And it shows that you have some sense of feel for what these indicators can help you predict market turns. This is extremely risky to be buying. I would not do that. I'd be buying the hell out of puts. Next, almost the same story on silver. Very close. Next, guess what? Platinum got overbought again today. New high close. Normally a bit bullish. True. But I don't like this divergence thing. Now again, third time new high price, but not a third time a new high on the indicator. That's like a double divergence. Next, copper slipping off, probably slowly but surely back to the previous support area. I might abandon copper sometime in the next many months, a year, because I think it's going to become not that interesting to the public. Next, soybeans. Nice rally, didn't hold all that well, but at least it didn't go down. Trying to make a case for a bull move. We did catch the exact low day on October 1st so far. Next, and I'm bullish. Soybean oil has held well a couple of weeks ago. Today made a new high, but it closed smack dab at the bear trend line, which is the wait a minute. I was wrong about that. Sorry. It closed around unchanged. There you go, 0.23 higher, hardly higher. And that's not good. You basically tested the trend line, got above it, and then fell right back below it again. But I'm still looking for a major turn. Let's see how it handles this little dip it might have. Close above today's high would be very good, turning me outright bullish, just generally neutral to expecting bullish. Next, meal. We had an outside up day yesterday. We went up a little bit more today. That's normal. I need to close above this resistance line at 282 to be very optimistic. Otherwise, the oversold condition has turned it, rallied, came back, tested, starting to move up a little. Neutral to bullish. And corn, pretty much the same commentary. Add a little resistance right here. Oh, last couple of weeks, big deal. Maybe even a little more important than that going back to July. But no high hopes, just some low hopes. Next to be bullish. Wheat, I give up. This thing, it just won't keep doing what it's doing. This is one of the most classic longer term bear moves I have seen in a long time. Remember, I've been watching this stuff for 53 years. About to be 54, I think. Apple dropped off a little, held minor support last few days, closing around unchanged, no progress, no detriment, just stuck here for a few days. Looking for lower levels, test support, and even lower than that. Wouldn't be a damn bit surprised if 225 was in the near future. Tesla, we got the high day exactly, bearish engulfing on the top day, October 2nd. So far, drifting off. Has had a lower low a couple times, waiting for new lows. Looking for a move down to close the gap, and that would be at least down to 396 and 3/4. But there's also a little gap below that at 369.80. And there's a gap, but although it is below significant support, so that's a little iffy. So I'm looking for really a move to 365. Next is NVIDIA, which we have sold short on the exact high day. 1010. Sound like a familiar number? And yesterday we had another bearish engulfing. So today's little bounce doesn't bother me, makes me a little nervous. But the buy stop on this last signal yesterday would be above yesterday's high at this point. On the longer term trade, because we've already dropped on the new low ground and the trailing stop would have come down and all that good stuff, I don't have an exact answer for you, but it would have dropped off quite a bit, probably cutting the original risk in half. Next, we have a new high, but not a new high close in AMD, the chip people, and there's a huge, what still could be called an exhaustion gap, but that's kind of wearing away because you did make the high, and then a couple of days later another, and today is another. I don't know. I think it's topping out, but it's not telling me that. We have a little bit of a dip here, and this is it. Ladies and gentlemen, thank you very much, and you have a great day and profitable trading to you.